Moving on with the program, on Friday last week, the governor of the Central Bank of Eswatini, Dr. Philip Nisi, released the monetary policy statement, maintaining the discount rate at 6.75%. The central bank maintained its inflation focus for 2026 at 3.97%, while the focus for 2027 was marginally revised upward to 3.93% from 3.84% focused in November of 2025. The inflation focus for 2028 stands at 3.4%. Credit extended to the private sector increased by 9.8% on a year-on-year basis, closing at 22.4 billion emalangeni in December of 2025. Business credit stood at 11.9 billion emalangeni, while credit extended to other sectors of the economy decreased slightly to 1.1 billion emalangeni. What does all this signal for the business environment? We're now joined by the President of Business, Eswatini, Mvuselelo Fagutse, to provide his insights. Fagutse, thank you so much for your time this afternoon. As the business fraternity, what do you make of the CBE's decision to hold steady on rates?
Thank you very much, and good afternoon to Eswatini. The Central Bank of Eswatini keeping rates unchanged means that cost of funding for the private sector remains the same for all businesses. It is a reflection of the underlying economy, but also the extent of inflation. We know it's tapering down. It was in December specifically, it was about 2.3%, and if it remains at that level, we do expect some pressure to be felt if the situation gets worse. But I think for now, the inflation rate is promising. And with that, we expect that if it remains at that level, that interest rates in the medium term are going to come down.
Let's talk about the CBE's focus for inflation. Inflation is projected to remain just below 4%. Should firms or companies or investors then expect real relief in terms of operation costs, in terms of input costs or productions, and pricing pressures as well, or there's a risk that then could affect such gains?
Yeah, we would expect stability in the medium term, but I think the real risk might emanate from the currency. We've seen the currency strengthen against the dollar, which means the cost of fuel, which impacts everything that we spend on as consumers, will remain at lower levels. But if the dollar strengthens against our currency, that is where I think the primary risk is at the moment, and we hope that it doesn't happen, and that the cost of funds is going to remain the same, which means that funding or cost of debt will remain affordable for the private sector.
According to the monetary policy statement, CEO or President rather, the business credit rose to at least nearly just 12 billion emalangeni. That's at 11.9 billion emalangeni. What sectors would you say are then driving this demand? And is it really, does it signal genuine confidence, or it's a matter of businesses necessarily borrowing just to survive?
It depends on the type of industry that we're in. We've seen the sugar industry, for instance, increase their borrowings, and that's to fund additional capacity. As you know, the weather was good in the last period, and therefore a lot of cane has been crushed, and it continues to be crushed by the millers, which means that a lot of the credit is extended to that sector, but also the industries that supply that sector, the transporters and the growers, a lot of credit is circulating around that area. And we expect that to, I would say, to improve as the crushing season comes to an end and growing starts again in the sugar industry, which is the biggest impact on the economy, but also other sectors as well. I think that there's going to be a lot of economic activity. As we hear, the government is constructing various projects from the dam and also the strategic fuel reserve. All those projects are going to consume a lot of debt from the banks, funding most especially for for the suppliers to those large projects, which are normally SMEs and medium-sized enterprises in the kingdom.
My last one, Fagutse, in 30 seconds, please. Given that there's a rise in public debt, we still need investors in the country. As the business community or as the private sector, do you have concerns with regards to the rise in public debt when you look at fiscal sustainability and macroeconomic stability as we look ahead of 2026?
I think as long as the rise in public debt is happening at the same time as the growth in the GDP, then it's not a big issue. We just don't expect it to reach 50%. As long as it's below those levels, the rise is not a big concern for us because you can see economic growth, GDP growth averaging 5 to 6%. So it is supported by real growth.
Mvuselelo, thank you very much for your time. We'll leave it here. That was Mvuselelo Fagutse, who is president of Business Eswatini, chiming in on the recently announced or recently released monetary policy statement by the Central Bank of Eswatini. We'll now move on to some of our business stories where the Royal Science and Technology Park has